Show me the crypto. Show me the crypto. Show me the crypto.
In a world on the brink of disruption, two men will bring you clarity by interviewing some of the most intelligent and influential names in the blockchain world. Welcome to Show Me the Crypto with your hosts, Wade Patterson and Ulf Lonergan.
Well, hi there and welcome to Show Me the Crypto. My name is Wade Patterson.
And I'm Ulf Lonergan.
We're a couple of friends from Canada who love learning about cryptocurrencies and blockchain technology, and we're happy you're along for the ride. Whether you're a crypto virgin or you know your way around the block, we hope our interviews with some of the most intelligent and influential people in the blockchain space help bring you value. And on this episode, we're joined by Anthony Sassano, Product Marketing Manager with Set Labs, co-founder of ETH Hub, and founder of the Daily Gwei. If Ethereum was a museum, Anthony would be its curator. To say he has his finger on the pulse of all things Ethereum is simply an understatement, except perhaps when it comes to ETH all-time high price predictions. At the time of recording, Anthony is still experiencing a self-imposed Twitter ban for a premature all-time high prediction, but hopefully by the time this episode has launched, he will be free from Twitter jail. Anthony, welcome to Show Me the Crypto.
Hey guys, great to be here and great intro. You're reminding me about my self-imposed Twitter ban. It's not fun, that's for sure.
So for our audience who maybe isn't aware of this story, what exactly happened there?
Yeah, so I think it's about 8 or 9 days ago now. You know, ETH was running up. It was hovering at around $1,300, and I thought, we're so close to the all-time high of 1420. It's going to get there. So I'm like, I'll put out something on Twitter, and I basically just tweeted, I won't be tweeting again until ETH hits all-time high, and then send it. And then, we had that big crash. It came down 30%, all of that. And now it's become a kind of meme on Twitter where people are basically, making fun of me for not being able to tweet. So, I mean, it's fun seeing the memes, but it's been very hard because, it's been a little while now. And I am a prolific tweeter for anyone who follows me on there.
And what are the specific rules behind it? You're allowed to retweet, right? Like, what are the specific guidelines?
Yeah. See, people think that retweeting is considered tweeting, and they're having a go at me for that as well. But I don't consider that tweeting. And it's funny. Someone called me out and said, retweeting is cheating. We should banish him from the community. And I retweeted that tweet as well.
I love it.
I saw, unless I was wrong, there is still an Anthony Sassano Twitter account. It's just an imposter account.
Yeah, actually, yesterday there was a few imposter accounts that kind of popped up, and I think it's very easy to fall for it on Twitter because you don't really look at the usernames, right? You always look at the name. And one person said, I've sold all my ETH for Bitcoin, and all these people came in and said, good choice, man. All these Bitcoin is good choice. ETH's not going anywhere. It was pretty funny.
Oh, that's amazing.
That's good.
So I want to back it up to kind of your introduction to the blockchain space. When did that happen? When did that occur? And what was your original impression when you learned about the space?
Yeah, so I guess I had two kind of introductions to crypto. First one being in 2013 when I first discovered Bitcoin, kind of rode that wave up to the all-time high from I think it was about $100 when I found it. And then the MT Gox stuff happened, and the price crashed, and everyone thought Bitcoin was dead, including me back then. I was naive. I was quite young, carefree. I was like, oh, whatever, I made a little bit of money. I'm just going to cash out. That's kind of history there. And then I actually, didn't hear about Ethereum until early 2017. So I kind of miss, all the really early Ethereum days, unfortunately. And it's just weird to me because I was so into Bitcoin back then. And the fact that I didn't even hear about Ethereum until early 2017 was just amazing to me. Being stuck in different bubbles, you completely miss what's going on in another bubble. So, since then I basically, have made it my life, essentially, Ethereum. I didn't leave during the crash of 2018. I kind of like just dug my heels in even more. Cause in 2017, the bull market, man, you can't really do anything except, get caught up in it and, watch the charts and everything and speculate. So I did all that. And then in 2018, the market came down. I'm like, okay, I know this stuff's like the future. I really believe in what we're doing here. I'm not going to leave this time just because the price came down. So I started really basic. I started a weekly newsletter in early 2018. Back then it was called the Block by Block newsletter. And then I kind of did that during 2018, joined a few different communities, got to know the community more. Kind of started out on Twitter a little bit because before that it was all Reddit. So you went on ETH Trader and you went on the daily threads and you talk in there. But crypto Twitter was like very small, but obviously since then it's grown a lot. And then 2019, I guess, was really my kind of breakout year, I guess. Early 2019, I launched ETH Hub with my founder, Eric Connor, co-founder Eric Connor. And then from there, we got really active on Twitter, kind of built a presence up on there. And all this time I was still working outside of crypto. I was working in cybersecurity for a telecom company. And then mid 2019, I kind of got in contact with Set, joined them, and kind of have been with them since then. And then mid 2020, I launched the Daily Gwei, which is a daily newsletter and a daily YouTube video as well, like recapping Ethereum. And then, just been doing that since then. And it's 2021 now, and that's kind of what I keep doing. The weekly newsletter from 2018 became like the ETH Hub newsletter. So I've still been doing that. And that's just like a weekly recap of Ethereum. But yeah, basically everything that I'm doing has got to do with Ethereum. So yeah, there's a lot going on, and you try to cover everything, but you always miss something. It's just crazy.
Yeah, and there's so many things that you just talked about that I want to dive into, but I guess at a high level, you've got this huge focus on Ethereum. So what about Ethereum just makes you so excited? And keeping in mind, probably a large part of our audience may be brand new to crypto. So what is it about Ethereum that's got you excited?
Yeah, I guess, for newer people, it's kind of, we go around about in crypto, it's got to kind of click. And once it clicks, you kind of like have this explosion in your brain and you finally understand like all the possibilities, right? So to get to that point, you have to like really dig in and, listen and watch things like what you guys are doing and kind of educate yourself. But for me, what really, really excited me was that originally I was really excited about Bitcoin, right? This form of decentralized money, right? That was outside of the purview of governments. And, the fact that it even worked was just amazing, right? Once you really learned about it and the mechanisms behind it, you thought, wow, okay, this is real, right? This isn't a scam, this isn't some magic. This is actually real technology. And then when I discovered Ethereum, Ethereum takes it to the next level. It also has a decentralized money on its blockchain, but you can build applications on it as well. So you can basically think of money as an application if you want. And then, Ethereum lets you build more than money applications, lets you build any application you want because it's general purpose. So it's like, not to insult Bitcoin or anything here, but it's like, if Bitcoin's like a calculator, it does one thing well. Ethereum's like a general purpose computer where it can do many different things well, right? So that's like a bit of a crude analogy, but I think it works for newer people to understand. So that's kind of what drew me in. Originally it wasn't, DeFi wasn't a thing. People have heard of that back then. DeFi only really kind of became a thing in 2019, in 2020. But back then it was all about decentralizing like social media, for example, right? Having like a decentralized Twitter where, you couldn't just get deplatformed, by a central party and things like that. There was, ideas to do, all sorts of wacky things. And the funny thing is that a lot of the ideas back then actually came from early Bitcoin ideas. So a lot of people wanted to do this on Bitcoin, but you can't actually do this on Bitcoin in any kind of easy way. It's very difficult. It's expensive. It's time consuming. So that's why Ethereum was kind of born to do this. So yeah, today the winning applications right now are these DeFi applications where you can have an entire financial system built on this network that's outside of the control of any one party. And that's really what, most of the community is excited about these days.
So, Anthony, you're the marketing manager with Set Labs, and Ulf knows a bit more about token sets and that kind of thing than I do. But what is token sets and what is your involvement with that platform?
Yeah, so Token Sets is a website. So if you go to tokensets.com, you can see it. It's built on top of a protocol called Set Protocol that we built. So what it is, it's basically an asset management protocol. So you can imagine asset management within the traditional finance system where you have, brokers, fund managers, banks, all these kind of parties working together to provide you financial services, for example, right? If you want to buy an index product, you go to your bank, right? Or you go to a brokerage or something, you buy it there. If you want to buy stocks and shares and all that, you do that. If you want to trade, same thing, right? So what Token Sets aims to do is rebuild this kind of asset management infrastructure on top of Set protocol. And then, kind of anyone can build asset management products on top of it. So it's like a neutral platform. It's not controlled by us. We don't say what you can and can't build. You can build whatever you want on there. So some example products, I guess our most popular product right now is our DeFi Pulse Index. So what this is, it's basically an index of the top 10 DeFi tokens within crypto, within the Ethereum space. And buying this index is the same as buying the S&P 500, for example. You get exposure to these kind of it's market cap weighted, so you get exposure to these tokens, so that if DeFi in general is going up, you don't have to pick and choose, which token you want to buy and sell. You can just buy the index and you'll get the upside. So there's that product. Earlier products we had were automated trading strategies. So you could buy what we call a set, which is basically like a representation of a trading position on Ethereum. And that would automatically trade based on a strategy for you. So, traders use different technical indicators to trade the markets, and that's what this product would do for you. And then on top of that, we had social trading, which was like copy trader. So there were traders on there, using their own strategies, and you could buy into their strategy. And then every time they made a trade, you would technically make a trade. So if you believe that this trader could be profitable, you'd buy in and all that sort of stuff, and then you'd get the kind of upside there. So those are just the products we have kind of over the last couple of years. The index product has been our most popular to date. I think as new people come into this space, they're more familiar with index products. It's very hard to kind of catch a pump, so to speak, right? And then as newer traders, you keep chasing different things and you kind of lose out. So index products are very popular for people who are like, I know DeFi is going to grow, right? But I don't know, I don't want to spend all this time managing my positions, and it's too much of a headache, it's too much stress. So I'm just going to buy this index product, which is what we're seeing happen here. And even seasoned people in DeFi are buying it too, because even if you're in the space, you know what you're doing, like markets are very complicated. It's very hard to kind of beat, a benchmark, right? If you're benchmarking against like Bitcoin or Ether over long periods of time, it's kind of hard to beat that, right? Because you maybe overtrade or whatever, or you undertrade, or you're not exposed enough, and you just, the human emotions just take over, right? And you have this kind of thing. So that's what Set kind of aims to do with a lot of its products, is like automate this stuff, make sure that you still have upside, but you don't have to deal with the stress. You can literally leave it there and not even do anything once you've bought it, because the index rebalances monthly automatically. And then on top of that, those other products I was talking about also kind of trade automatically. So yeah, that's kind of at the core of what we do. And there's plenty of other products out there that still need to be built in terms of what we see in the traditional finance system in terms of asset management. And a lot of these products, you as a retail investor, like as a new investor, you don't actually have exposure to normally, because these products are reserved for actual traders and institutions, and that's how they make the money, and then they pass some of it on to you, right? And they take their fees and stuff. So what we aim to do is basically make it so anyone can access these without any middleman, right? You can access these strategies without going through a middleman, do it yourself. And the fees are much, much lower. So yeah, it's kind of I guess like a TLDR of what we do.
So as someone who is an active user of Set protocol, I think I was introduced to it around early 2020. I've basically been a user since then. I'm a big fan, and from what I've seen in that time is it's an ever evolving company, and the direction and the products that Token Sets is adding and changing is quite ongoing, let's say. And there's already been a lot, like for example, everything you just talked about in regards to the DeFi Pulse Index. That's something that came kind of out of nowhere for a lot of us. And prior to that, it was just these trading sets that you could buy into. So there's lots changing there, and I'm curious. There's been some word around the potential phasing out of the social trading sets. I'm not sure if you're in a position to speak to that at all, or if that's like still not quite official news. But if you can touch on that, that'd be great.
Yeah, so I guess, taking a little bit of a step back there to explain, I guess, why SET has to move so quickly and deprecate products that maybe some people find useful and others don't, and create new products really quickly, simply because we're so early within this ecosystem that, it's always changing. Like the whole ecosystem is ever changing, right? Nothing's really the same week to week. There's new things happening. For people who have been paying attention, yield farming wasn't a thing until 6 months ago, right? That wasn't even a term in the crypto lexicon. And then everyone's kind of had to change how they think about building products around kind of like yield generation too, because everyone wants yield on their assets now. Like no one wants to hold an asset that doesn't give them yield. So, there's that kind of as an example. So in terms of what we're doing at SET, yeah, we kind of like, I guess you could say we definitely do pivot a lot with what products we want to build. We try to kind of harness latent demand and what's not available and what's not kind of in a kind of scalable way yet. So that's why we launched the index product, because we thought, new bull market, plenty of new people coming in. They're going to want exposure to an easy product that they're familiar with. So that's why we bought the index product. As for the social traders that you touched on, yes, unfortunately, for a number of reasons, we've had to kind of put a pause on that. I wouldn't say we're deprecating it completely, but we have to kind of put a pause on it for multiple reasons. One of the biggest reasons is that the Ethereum gas fee, so the fees you have to pay to interact with the Ethereum network, are quite high. Now, the fees that the traders have to pay when initiating a trade are quite high because of that. So a lot of them, when you take into account the fees, it would eat into a lot of their profits, right? So they'd be disincentivized from trading, and some of them actually just shut their kind of products down because they're like, it's not worth it for me to do it. Mm-hmm. So that was a big reason. Another reason is that we are rebuilding the protocol, like kind of a V2. And which will actually give a lot more flexibility to people if they want to use our infrastructure to trade and do these sorts of stuff. So we're kind of like really hard focused on that, because the social trading took up a lot of time as well from our team to manage, because we have to manage humans. Whenever you have to manage humans, it takes up a lot more time than anything else. So we had full-time employees, like basically doing all this across the whole company. And that was extremely time consuming, and it was taking time away from, building out these products that we figured, once we build those, it'll be better for the traders, right? They'll be able to, it'll be cheaper for them because we'll make sure that the protocol is more efficient. So it uses less gas, which means the fees are lower. There's more flexibility. A lot of them, you have to use our system that we built to trade, whereas we want to build in the ability to trade using just Uniswap or any of these other decentralized exchanges on Ethereum, and the trader could pick. So yeah, it's just a mixture of things. I wouldn't say it's gone completely. I just think it's going to evolve, and we might not even call it social trading. We might just make it so that anyone can create their own kind of set on our infrastructure, right? And then they can do whatever they want with it, right? They can, say, buy into my set like I'm a social trader or whatever, or like I'm a fund manager, or I'm a DAO. Like there's a DAO. We have Yam, the project Yam. They're actually turning their treasury over into a set DAO. So basically what happens is they're going to have a manager, and then the Yam token holders can vote on what happens with that treasury. So that's built on SET protocols infrastructure. So we've just evolved, basically. We're trying to make sure that we build out a nice V2, because V1 was very crude, right? SET's one of the oldest DeFi projects from late 2017. So a lot of the code was actually very, I guess, like very old code. It didn't have like the best practices that were discovered later on, sort of thing. And that's what made it more expensive to use too. So yeah, just a bunch of different things there. But V2 is very exciting. We kind of like announced it last year, and we've been building it since then, kind of rolling it out in phases. But yeah, I think you'll see more of that coming this year. The end of last year, we focused on kind of the DeFi Pulse Index and growing that and making sure that was all good. And now, yeah, I think we're going to go back into basically making sure that SET protocol as an infrastructure layer is available to all these different parties to build whatever they want on it, and fulfilling kind of the original vision that we always kind of saw.
So in regards to DPI, I'm a DPI holder. I love the idea. I love the token. I think it's great what you guys have done there. And I actually just recently filled out a questionnaire that you guys put out, or that index, the index co-op put out. in regards to the future of DPI and how to maybe give the token more utilization options in the future. It was interesting going through that, just in providing my own feedback. Obviously, there's lots of ideas being passed around. Do you have any personal ideas for how you'd like to see DPI change and evolve in the future? And perhaps beyond DPI, are there other index tokens that will be coming out through Index Co-op?
Yeah, so with the DPI, I think it's such a powerful product within DeFi for a number of reasons. And some of these things aren't enabled yet, some are. So the first thing is this concept of, I guess you can call it meta governance, where a lot of these tokens within the DeFi Pulse Index or the DPI are governance tokens for other projects, other protocols. And the DPI actually ends up holding a lot of these tokens because every time new DPI is minted, it goes and kind of buys the tokens, or it gets the tokens from the open market and puts it into the vault, I guess, so to speak, that backs up the index. So those tokens can be used across DeFi to do governance and other sorts of things. And we're actually doing that right now. So what ends up happening is that, as you mentioned, there's this thing called the Index Co-op, which is a kind of decentralized organization that manages the DeFi Pulse Index and other index products. So that has a native token called Index. So what Index token holders can do is that they can actually vote on proposals in Compound and Uniswap, and then the tokens within the DeFi Pulse Index, the Comp and Uni tokens, can go and vote on those governance proposals. So that's what I mean by meta governance, right? Because the Index token holders are controlling what the Comp and Uni tokens in the DeFi Pulse Index do. So that's quite, I mean, it doesn't provide any direct value in terms of monetary value to the index at this stage. It's just like a really interesting thing to see play out, where the Index Co-op community can have their voice heard in these protocols through a kind of like mechanism like the DPI. So there's that. And then the second thing is basically earning a yield on the underlying assets in the DeFi Pulse Index. This is a hot topic, but the one thing about this is that it increases the risk, right? Because if you start lending out or putting these tokens into different smart contracts and kind of like earning a yield on it there, one, you got more smart contract risk. Two, sometimes you have to lock the assets. So if you're locking the assets, it means that it's not available, technically not available in the index. So there can be some trickery there when, when someone maybe goes to redeem a DeFi Pulse Index and like take the tokens out of it. And that might cause some kind of funny business there. But it's definitely like a risk thing for sure. So the community is kind of split on it. They're like, maybe we should just create another kind of index that we label like the riskier index, and then that can do the yield farming and things like that. Whereas this one just stays a simple index, which I kind of get. And on top of that, some of the governance mechanisms require locking up of a token to participate in governance. And that also introduces the same issues where if you're locking up a token, it kind of means that the DeFi Pulse Index doesn't have access to it immediately. So a lot of the stuff that happens on the kind of trading side gets kind of screwy. And as a short example here, the way the DeFi Pulse Index stays at the correct price. So there's the net asset value of all the tokens that are backing up the DeFi Pulse Index. So those tokens can change in price, obviously, and the DeFi Pulse Index can change in price. Then there's secondary markets. So if someone buys on a secondary market, the price of the DeFi Pulse Index on the secondary market goes up, but the actual net asset value of the index hasn't gone up, right? Because there's no new DeFi Pulse Index being minted. So what ends up happening is that arbitrage bots or traders will have to go and mint new DPI or whatever, and then kind of like close that arbitrage loop between the secondary exchange and the DeFi Pulse Index. Now, you can imagine if tokens are locked, right, you wouldn't be able to do that because there's some portion of the tokens that aren't available to be part of the arbitrage loop, and you would kind of get mismatch in pricing. So that's the major reason why we haven't inputted like yield farming or anything like that into the DeFi Pulse Index. And yeah, I mean, the governance stuff works really well. I think that's pretty powerful and exciting in of itself. But then, yeah, as I said, there's going to be other index products coming out, maybe a higher risk DeFi Pulse Index or another DeFi index. The reason it's called the DeFi Pulse Index is because DeFi Pulse is the managers of it. So DeFiPulse.com is the most popular kind of DeFi tracking website, and their team created that index. So there might be other DeFi indexes. We have a couple of others coming out, like a company called CoinShares wants to do a gold, ETH, and BTC index. There's the same kind of team that put out the DeFi Pulse Index are doing an index called the Flexible Leverage Index, which basically lets people kind of open a leverage position really easily as part of this index, and they don't have to manage it. The index automatically manages it themselves, which I think is going to be very popular because people do want to take on leverage, but it's kind of risky to do it yourself. If to manage a position, you have to stress about it. So with this, you don't have to stress about it. There's a company called Token Terminal that does fundamental analysis on different DeFi protocols. They want to bring out an index based on the fundamentals, basically. So, if something is basically trading at like really high, like if their price to earnings ratio is like super high, maybe it's overvalued, right? Maybe you get rid of that in the index and you kind of like put in something that seems undervalued to try and capture the more upside there. So yeah, I mean, there's always new ideas being posted. Anyone can post an idea to the index co-op on the forum. You can say, I want to see this index. Like we have indexes for like NFTs and gaming indexes. People want that. There's indexes for like layer 2 protocols, for scalability on Ethereum and things like that. But when submitting an index, and we have guidelines for this, it really does it have mass appeal, right? Because there's a lot of index products that you can build, but if it's just like one small niche community that really cares about it and it doesn't really get much appeal, then it's not worth the index co-op's time to launch it, manage it, keep an eye on it. So there's that consideration as well. But yeah, I mean, I'm super excited about where the index co-op is going with all their index products, because the DeFi Pulse Index, I mean, as I just mentioned, it's limited because it's a low risk product, so it can't do all the fancy stuff you want to do. But that doesn't mean that we can't launch other products that do all that stuff. And there's just an infinite amount of things you can do that I mean, I haven't even thought of yet. Like every day I see people putting out new products. I'm like, wow, okay, we can actually do that. I didn't think of that. It's the same thing with these index products. So yeah, that's kind of the spiel there.
Ulf, did you realize that our audience has either been watching or listening to this episode for more than 20 minutes?
20 minutes? No way. They should probably subscribe.
Yeah, they should subscribe and like and comment and turn on that notification bell. All right, back to the episode. Since you mentioned NFTs, that's something that I'm really, and I don't think I've wrapped my head around all of the potentials that are there. Do you mind explaining non-fungible token, what the difference is between fungible, non-fungible, but also, you think of things like collectibles, but beyond that, like where's the use cases for NFT and what is the potential of that?
Yeah, so I guess I'll explain the difference between non-fungible and fungible tokens. So fungible just means that every token is treated the same. So every ETH is the same as every other ETH, for example, right? So there's no uniqueness about it. It's just an ETH. Whereas the non-fungible tokens are unique, right? They have unique properties. They're everyone is different, and they usually are used to represent things like gaming items or art or memes or things like that, right? All these sorts of things. So what people are really excited about is the kind of collectible aspect to it, and the fact that we're basically creating digital collectibles. Because if you think about it, you couldn't have digital collectibles before blockchain was invented, because there was no concept of scarcity, right? Where you could just copy paste anything. You had no kind of proof or technical and social proof that this thing was actually scarce. You could say, I have the original image, but like to prove that it was the original, like, and that you created it from scratch, you had to either at the time kind of like encrypt it cryptographically. Sorry, that's probably not a word, but like cryptographically, that's the word. Yeah. So you had to do that from the start. You had to like watermark. You had to do all this kind of stuff, right? And even then, people might not even believe you, for example. So and that was the reason why Bitcoin was such a breakthrough, is it introduced this concept of digital scarcity, right? Where we have this ledger that everyone agrees on, and it makes Bitcoin scarce. That's the real innovation behind all of this, by the way, is digital scarcity. So when you extend that out and you go from just Bitcoin, you had Ether, of course, and all the tokens on Ethereum, and NFTs are just a form of token. So, people get really excited about collectibles. I mean, you can see behind me, I'm also a bit of a collector myself, but
Love it. Love it.
yeah. So, physical collectibles obviously have been a thing for hundreds of years, right? From classic art and like fine art to, trading cards, for example, we've seen, right? Like baseball cards and things like that. So that concept is not a foreign thing, right? Collectibles and people being excited about it. But where the jump that a lot of people kind of, I guess, fail to make, and where they're very, very skeptical, is that, the physical thing, you have it, right? No one can just copy paste it. You can't clone things in real life, right? Whereas with these NFTs, say you've got like an NFT that represents a piece of art that someone made, people always make the joke, I can just right click on it, click save as image, and I have it, right? But you don't have it. What you have is a representation of it. You have a copy. You legitimately have a copy of it. You don't have the original that's on Ethereum that basically has this token that says this is the original, right? And you can cryptographically prove that it's the original because of how the Ethereum network works. So that's what people value, right? Just like the real Mona Lisa is more valuable than a copy, even if the copy is really, really good, right? Yeah. The real one's always going to be worth more for various reasons. So that's the same with these NFTs, and you can prove it. And everyone can see it. Anyone who has access to the Ethereum network can see that this is the original. So that's the real innovation here. And obviously, people have kind of, I guess, like emotional attachments to collectibles as well, which plays a big part in it. It's funny, one of the original NFT collectibles is called CryptoPunks. This was in 2017. Back then, they were basically worthless, right? No one really cared. 2017 was all about ICOs. They're like, oh, who cares? This is just like an image on the blockchain. Like, no one cares. Now, those things are worth hundreds of thousands of dollars. People are paying because they're the original, right? You want the original the NFTs, right? You want the first thing. You want to be a holder of one of the first things. So I actually think the price floor. So even there's different rarities of these CryptoPunks, but I think the cheapest one you can buy right now is 5 ETH, which is over $5,000. So they went from being absolutely worthless, where they were basically getting given away because you can get it for free from the site, I think, or pay a very low amount from the original creators, to being that pristine collectible now. That is the original, right? So, and it's kind of funny because people say, Bitcoin is fungible or Ether is fungible. But I bet that if someone could get access to a Bitcoin from the Genesis block, right, of Bitcoin, right, or from one of the early blocks, they would pay a premium for that Bitcoin because it's tied back to, and cryptographically tied back to that block. So when you kind of really think about it and think about what people kind of covet and what they want, and kind of, it's like a bragging thing as well. Like you can show it off, right? You can say, I have one of the original CryptoPunks. People do it all the time, not just with this sort of stuff. You see on Twitter, oh, I'm OG crypto Twitter, right? I'm an OG in crypto. I was back in at 2013. And you kind of have people say, the earlier you were, the more like kind of respect you kind of get, because you're like, you were really early to this. You've been around for ages. You must know what you're talking about. Same thing with like the kind of NFTs. Like, oh wow, you have a CryptoPunk, right? You saw like the NFT stuff before anyone did. This is super rare. So I think that's the jump people kind of fail to make, is that the copy pasting is simplistic. It's everything that surrounds the kind of like, I guess, thing that makes it valuable and makes people want to have it. I mean, I have one CryptoPunk. I wish I had more now. Back then, I didn't even care. I was like, oh yeah, this is cool. I'm just experimenting. Maybe it'll be worth something one day. But now I'm like, should I buy some more? This one's cool. This one looks like me. So, there's that to it. But I'm not going to buy them at $5,000. It's a bit rich for my taste, but people do, and people buy them for hundreds of thousands. And it's not just the CryptoPunks, it's everything. It's the art, the in-game items. You can imagine if the in-game item is extremely rare, people are going to pay a premium for that. And they already do in the traditional gaming world, right? Where people buy and sell like accounts, for example, right? Or they pay someone to kind of run them through maybe a dungeon and to get a particular kind of item that they want, right? It's the same kind of concept of this just rarity and this scarcity. But Ethereum takes it to the next level because you have digital scarcity, real digital scarcity that no one can change. There's no central party that can just print more. Once it's out there, as long as there's no kind of backdoors and things like that. But if it's done properly, no one can copy it, and you have proof that it's the original.
An interesting use case I heard recently I'm probably going to explain this wrong, but is kind of like a P2P curator or creator network, let's say, within, let's use games as an example because it's a easy use case. But let's say like MMORPG, and within that MMORPG is the shop, and you can go to the shop and you can buy items, skins, weapons, whatever. But rather than in today's environment, in most cases, where the developer of the game is the one who creates these in-game assets and then sells them to the players. And again, the players don't really own them. They own representations of them. With NFTs, beyond just having those actual unique items and being able to then maybe sell them, off-site, things like that, in a P2P creator network style, there may be games that then basically put it out there for the players who have the skills, the development skills to create those assets themselves, sell them on the marketplace to other players. And now you've got this ever evolving set of assets and in-game assets to continue to keep players engaged in your game, and you didn't have to expend any resources on it because you had the players do it for you, and it created this whole marketplace of its own. And I thought that was a super interesting way to think about how NFTs could be used that might make a significant impact and change on the way we do something like play and develop games today.
Yeah, I mean, if done right, it can work very well. I've seen it done wrong before. Within the gaming space, of they try to make this kind of like P2P or like these marketplaces that are still not very appealing. I mean, I don't know if you guys are familiar or anyone listening. There was when Diablo 3 launched, there was an in-game kind of auction house where you could pay real money for different items, right? People could put their items up on there. They couldn't. I don't think they could create their own items, but they could sell the items that they looted. And what ended up happening was that it was a disaster. It turned into basically, to pay to win, right? People were just like paying exorbitant amounts, and it kind of made the game feel very cheap. But I think the concept you're describing, if done correctly, can definitely create like this vibrant community that is kind of buying and selling these items, creating them. And it kind of maybe is akin to, if you think about games and how people create different mods for these games, right? Different modifications. And those are usually put out there for free. But, people still do, pay certain things for certain modifications, and they basically enhance the gaming experience. And the number one example here is Minecraft, right? Minecraft is extremely popular, has been extremely popular since it came out. It lets you do anything, lets you build anything you want. And then the modifications or the mods that came out for Minecraft were plentiful. There was so much going on. Now, you could imagine taking that a step further within kind of like the NFT space and having it so that you could sell NFTs, for Minecraft, like rare things that you've built, and then that could be in the game. You could sell these unique kind of, say you got like a weapon that you built or that you created, you could sell that, and then you could say, okay, well, there's only going to be like 10 of these weapons in existence, right? And that could mean that it becomes rarer down the line. So I think there are some attempts at this already. I mean, Axie Infinity is a very popular NFT kind of crypto game. I think they're doing something there. Decentraland is like a virtual reality land where people can create different things and kind of like go in there and then visit each other and stuff like that. So, I mean, I think we're just scratching the surface, and, I'm not going to say I'm an expert on the whole NFT space. It's funny because the NFT space is actually a bit removed from the general Ethereum kind of space, right? A lot of people coming into that are coming in through different doors. I like to think of the Ethereum network as a bunch of doors, and you have a door that you can choose to come in from. I came at it from a monetary point of view. I'm very, very, into the weeds of the money and of course the tech side, but more on the kind of like protocol level tech, like Ethereum tech side. Whereas a lot of people are coming in now through DeFi, of course, right? Not just pure money, like pure monetary kind of theory and all that sort of stuff, but just like they want to put their money somewhere, they want to make a yield or something like that, right? And then the other door, which is pretty far removed, I think, because of just the way it works, is that the NFT door, where we have crypto artists coming into Ethereum, and they don't care about DeFi. They don't know about DeFi. They don't really care to get involved with the speculation. They're not trading coins on Uniswap, right? They're coming in and they're saying, I want to tokenize my art, right? People have been asking me to do this. I'm going to turn my art into an NFT, and then I'm going to sell it. And we saw an example of this happen recently. There's a very popular artist called Beeple who has millions of followers on social media. He has been creating a unique art piece every day for, I think, 12, 15 years or something, like a very, very long time.
Wow.
Now, what he did was he brought his art to the Ethereum space, tokenized it, actually went beyond that and had physical representations of the art as well, I think, with like embedded QR codes that could prove that it was, digitally scarce on Ethereum, right? And he made $3.5 million off that, right? He sold his art that he'd been creating for ages, and he made a whole thing about it, right? So that's the kind of person who, I mean, I don't think he would have traded on Uniswap or he's been trading like different coins and speculating. I don't think he's taken loans out and gone leverage long on things. I don't think he probably knows, the ETH2 roadmap, for example, right? He's just a guy who does art, right? Is in the art space and has kind of made the jump into crypto art now. And obviously it's been very, very profitable for him. But this is what we're going to see. We're going to see more and more of these people coming in from the gaming community, the art community, the meme community, right? People who want to like own a meme as well. But I should mention as well that NFTs can be used to represent any unique thing on Ethereum. It doesn't have to be these kind of art and gaming things. You could actually represent an insurance policy as a NFT. So every insurance policy is unique, right? Unique to the individual. So that means you can actually create an NFT token that represents that insurance kind of cover that you get, and then you can do sort of things with that on the Ethereum network. So yeah, there's just a huge world in the NFT space, and I think it's just going to keep getting bigger and bigger.
Anthony, there's this buzzword that's passed around from time to time talking about different protocols or projects as being Ethereum killers. I guess the question for you is, would you consider yourself an Ethereum maximalist? And do you ever see any of these other projects cutting into ETH's market share?
So I think that the term maximalist has been kind of warped at this point. It's kind of being used to point to anyone who, I guess, kind of thinks that their chain is the best and their chain's gonna win and everything else is gonna fail, right? I think the original meaning that Vitalik put out back when he spoke about it was this kind of mentality that every other project's a scam, right? And everything's going to happen on Bitcoin. Like everything else is just a waste of time. Focus all your efforts on Bitcoin, and that's where everything's going to go. Now, I don't believe that, obviously, and I don't believe that's true for Ethereum either. I mean, I do think Ethereum has kind of won the race at this point. Its network effects are insane, right? Its network effects beget more network effects, right? So that, it's very hard to bootstrap an ecosystem, and Ethereum has bootstrapped one over a long period of time. And a lot of these quote unquote Ethereum killers are just now launching, right? So one, they have to catch up to Ethereum, which is going to take a while. And two, they have to outpace Ethereum, which is basically impossible because all of the stuff's happening on Ethereum. So for me, it's kind of a concept of, what has the highest chance of succeeding, and what is the most interesting space to spend my time in. That's been Ethereum, and it's always been Ethereum. I have never been bored in Ethereum. I've never seen kind of stagnation in Ethereum, right? We have ETH2, which is being built and rapidly being built. We have everything happening on ETH1, from DeFi to NFTs to protocol work still on ETH1, all this sort of stuff happening, right? And then on top of that, for me, I mean, this probably doesn't apply to the majority of people, especially new people coming in, but for me, it's like an ideological thing too. Ethereum represents my values and what I kind of value out of this technology and what I want to get out of it and how I think about it. From the fact that the original kind of Ether sale wasn't like reserved for anyone. Anyone could participate in it, right? It wasn't like a VC thing where you had to be a fund or a VC to get involved. Anyone could have bought Ether at the same price as everyone else, right? So that's a big part of it, because a lot of these new chains spinning up have these massive VC allocations where the community gets crumbs and these VCs basically get all these tokens and they control the network essentially because of that, because a lot of these networks are proof of stake where you use your coins to validate the kind of network consensus. So that's a big part of it. But this is going obviously into the nitty gritty of things and stuff that only the hardcore community members care about. The rest of the world isn't going to care about this. But I am of the opinion, and I have this thesis that you need that early community that basically turns into, I wouldn't call it a cult, but it's religious like, right? It's religious where it's following this kind of mission and this vision of like this network and where they want it to go. And you need that early on to bootstrap. Because if you don't have that, it's like a grassroots movement, so to speak. If you don't have that, it's very, very hard to get your kind of network out there into the world where other people want to join in. No one wants to join something that's like a zombie chain, as they're called, right? That there's nothing happening on there. So that's how I kind of approach it. And I mean, I can go on forever about it, but I won't because it'll go on too long. But basically, I just think Ethereum has won from a network effect perspective. So the other chains that are spinning up, they always claim things like, we're more scalable, right? Our fees are cheaper. We can do things better, blah, 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 blah. And, they don't ever tell you about the trade-offs, right? A lot of these chains that are saying that they're more scalable, they actually end up being more centralized because there's this thing where to scale a blockchain, you have to basically centralize it, or there's only a couple of ways you can do it, right? The actual layer one of the blockchain. This is getting into the protocol level stuff, but basically the reason why Ethereum is so kind of expensive to use and kind of not scalable is because it's very, very decentralized. It's very hard, if not impossible, to actually take over the network. Whereas these other networks they claim to be decentralized, but they definitely very centralizing, and that's why they can scale more. But also they don't have any activity on the network, right? So you can't say that we're more scalable when you don't have any activity happening. If everyone from Ethereum went to another chain, right, and did everything they were doing there, I'm fairly certain, at least most of them, some of them may be like, are very, very scalable because they're centralized, but whatever. Most of them would probably buckle under that load as well, right? Because it's just Ethereum has the load. That's why it's the way it is. Back in 2016, Ethereum didn't really have much going on the network, right? There was none of this stuff that we're seeing today. It was very small, and the fees weren't high. The fees were super low, right? And everyone thought, this is more scalable than Bitcoin because it is by about 3 or 4 times. But that's nothing, right? So that's where a lot of these kind of other chains come from. And going back to your original question about if I consider myself a maximalist, I don't. I just consider myself someone who really believes in the Ethereum mission and what Ethereum's trying to do. And I kind of think it's pointless to create another chain that's just like centralizing, because just create a database then, right? Just a normal database. Don't create like this complex blockchain, which requires all this complex stuff to do, trying to bootstrap this ecosystem and trying to do all this fancy stuff. It's just, it's so time consuming and it's so hard. This stuff's very, very hard. So from that point of view, and the community for Ethereum as well is just much, much bigger, much more vibrant. It has a great ethos. It kind of like, it can, people always say like the Bitcoin community is toxic, right? Because they attack other chains or attack other people. I think, a small part of it is pretty toxic, where they'll basically call anyone outside of Bitcoin a scammer, or you're like a no coiner if you don't hold any BTC, and you're a shit coiner, all that sort of rhetoric, right? You don't really see that within Ethereum, but I don't think that's because of, the different networks. I think that it's because the different sets of people and the communities within these networks, and also the scale. The bigger something gets, the higher the chance is for these toxic people to be around, right? If you have a community of 1,000 people and maybe like 1 or 2 are toxic, you're not really going to notice them, right? They're just noise. But if you have a community of like 10,000 people and then there's like 100 people that are toxic, well, it starts becoming more of a thing there. And that, I don't think that really plays into hampering the adoption of these things, because Bitcoin is still obviously getting adopted and Ethereum is as well, and all that sort of stuff. But the community matters early on, very early on. And the communities, when they're smaller, are not toxic. They want to work with each other. They want to, make sure that they grow this thing. But once you get to a certain scale, and once you kind of feel like success is guaranteed, right, you start turning from kind of like pragmatism, maybe like, being more easygoing to being defensive. Anything that comes out the network is perceived as an attack, right? Whether it be from other chains or from the media, right? For example, anytime the media says that Bitcoin's dead, even though it's stupid, right, the Bitcoin community really goes after that, right? They really hammer that home, because that's a defense mechanism. That's what they've been trained to do over the years. It basically, it's and as I said, you can compare it to like a religion or anything like that. You can compare it to like patriotism, right? If you're very patriotic and someone's attacking your nation, for example, whether that be verbally or physically, you're going to defend it. So I know it's getting a bit like into the weeds here, but I do fundamentally believe that early bootstrapping of a community is what matters for these networks. And if these other chains don't have that, then they're not going to succeed. And on top of that, and I always love to ask people this. If you had to tell me what the number 2 network was to Ethereum, right? What would you tell me? And if you ask 10 people that question, you'll get 10 different answers.
That's
so
true.
until there's an actual, sorry?
That's true. Very true.
Yeah. So until you actually get a definitive answer, right, from those 10 people, you can't even say that Ethereum really has any competition at this point. These other chains will carve out their own niches, I think. They've got a lot of money, right? These bigger chains have a huge war chest of funds that they raised. So they can actually exist for a long time just based on that. And their prices will go up, right? And then they'll have a community for a point in time because people will be making money. And then when you make money, you obviously feel very kind of attached to something. But in the long kind of term thing and what's going to be here for a decade, 2 decades, 3 decades, I pretty much guarantee that's going to be Ethereum. I can't say that for any of the other networks at this point, except Bitcoin. I guess I'm talking about the smart contract networks. But yeah, I mean, and for someone who's been around long enough, I've seen a lot of these Ethereum killers pop up and fail, right? One of the biggest ones being EOS, for example. That was a huge thing in 2017, 2018. Because people made money on it, right? They raised a lot of money. They raised like $4 billion allegedly, all this sort of stuff. But there's nothing happening on EOS. No one cares about EOS. Their community fractured because the team kind of the founder quit the other day, right? And this is the 3rd time he's quit a blockchain project that he's launched with a token. So everyone's like, is this dude a scammer? Like, what's going on? And all this stuff. So, to survive, you have to create something is easy. To survive, right? And to grow a community is extremely hard. And that's what you need to look at. So yeah, I mean, I'm just going to focus on Ethereum because I already know that it's survived. It's going to continue surviving. It has a vibrant community. Everything's happening on there. I'm having fun. Why would I change to another network and be like, oh, I'm going to go follow Polkadot or something like that? Maybe something happens there. I'm not saying it won't, but it's just an effort and time thing. I'm one guy with the same 24 hours in the day that everyone else has. I'm not going to focus my attention on something that I don't feel is going to, basically make my life better, make me feel happier and that sort of stuff.
Yeah, really well said, really well said. Before we get into kind of the last section, because we have a last section where we ask every guest the same questions, you had mentioned ETH 2.0, and we haven't had a guest on up until this point that can kind of just give the Cole's Notes versions of what that is and what's planned for ETH 2.0. Do you mind doing that?
Yeah, so I guess the current Ethereum network is what I've been referring to as ETH 1. And then ETH 2 is this very, ambitious upgrade that's been in the works for quite a while to basically change Ethereum from proof of work mining to a proof of stake, where instead of using hardware to validate the transactions on the network and form consensus, all these mining machines, as has been traditionally known, you use stake or ether or the coin, right, to do this along with hardware. So that's one of the biggest changes. And that actually went live. So ETH2 is a phased rollout. So the first thing that went live is the very first phase called the beacon chain. Now, what that is, it's basically just like a staking chain. You can send your ETH over, you can stake on there, and you can earn ether as a reward. Right? Doesn't do any of the smart contract stuff yet. Doesn't do transactions, none of that stuff. It's just the staking. And the reason it's being rolled out in phases as a separate chain is for security reasons, right? You don't want to try and upgrade and change all the pieces of the current chain with all the economic activity going on, because that's very risky. So they decided, we'll build it as a separate chain, then we'll move ETH1 into ETH2 when it's ready, which will happen within the next 1 to 2 years. It is like a kind of like, I guess you could call it slow rollout plan, but that's done for security purposes as well. And the second part of ETH2, the second major part, is what's called sharding. Now, this is a scalability technique where you split the blockchain up into different kind of shards, and then you can kind of parallelize them or parallelize them so that the transactions can be done in parallel on these different shards. So that if you have 100 shards doing 10 transactions per second each, as an example, you can have 1,000 transactions per second, right? Because it's all being done in parallel. So that's the concept behind sharding. But the thing is that with Ethereum, we also have the other side of the scalability, which is layer 2, right? So people might have heard of layer 2 on Bitcoin, such as the Lightning Network, right? And things like that. Layer 2 on Ethereum is also kind of similar to that, where we have state channels, which is what the Lightning Network runs on. We have something called rollups, which is this basically voodoo math technology. I don't understand how it works under the hood, but all the top researchers are very excited about it. And this allows us to scale on a higher layer, but still be secured by the layer 1 Ethereum network. So basically, with ETH2, once it's all rolled out, the grand vision is that we're going to have the ETH2 network be proof of stake, so no more mining, right? There'll be no more mining on the Ethereum network. There'll just be staking. We're going to have sharding so that the transactions can be done in parallel. We're going to have layer 2 that can talk to all the different shards and get even more scalability from that. And then on top of that, we'll have eventually smart contracts on the different shards so that you can even have even more scalability and even more expressivity. I think that's how you say it. But the real big thing is merging ETH1 into ETH2, because what's going to happen is that the ETH1 chain is going to become a shard within ETH2. So its own shard. And then there'll be other shards as well, but that'll be the most important shard for a long time, of course. But that's not going to make ETH1 more scalable, right? ETH1 as it exists today can be made more scalable in various ways, but by doing that, as I said, you centralize and you also make it more expensive to run a full node and validate the network. So we want to avoid that. But once ETH1 is merged into ETH2, we get rid of proof of work, and that's just being kind of come to consensus on with proof of stake. And then ETH1 is also can take advantage of layer 2 technologies, which it is already. There's a few different apps on layer 2. A lot of them are going live this year, where they're extremely scalable and still have the security guarantees you get from the layer 1 network. Whereas, if you bridge to another network and you go to another one, you're reliant on that network's security. So, if something happens there, then your assets are at risk. Whereas with layer 2 on Ethereum, when it's constructed correctly, which in a really great way, like something like a roll up, you inherit that security, so you can feel safe that your assets are just as secure as they are on layer 1. And that's basically the scaling approach that's happening there. So I think in the future, in ETH2, in ETH1, whatever it is, most people will be transacting and doing their business at layer 2. And layer 1 will become this kind of settlement layer where the bigger kind of players, the ones who the layer 2s will settle to, and the people who can afford, I guess, the gas fees will play in there. But they're the ones who are going to be providing like liquidity for layer 2s and things like that. And we need those kind of people. But because if you want to maintain a maximally decentralized system on the base layer, it does hit scaling limits, right? For various reasons. I'm not going to go into the low level stuff because it gets quite complicated, but that's kind of like what the approach is there. So in terms of timeline, we launched the first phase in December of 2020, so just a month ago. It's, I think, 6 weeks ago exactly. The next phase is introducing the shards, right, into that, but they're going to be, I guess you call them dumb shards, where they won't be able to do like smart contracts or execute transactions, but they'll be able to host data so that the different layer 2 technologies can actually tap into that data, which makes it even more scalable. But that might go live, or the merger might go live before that. So we don't know what's going to go live first. There's just whatever's ready. And then there's a bunch of other upgrades coming as well. But I guess 1 to 2 years, you can imagine, is where all this is going to happen in. But everyone wants it to happen as soon as possible, because the Ethereum community, one of its core values is that it doesn't like proof of work. It thinks proof of work is extremely wasteful. It thinks that it is centralizing. It thinks that long term it doesn't actually work very well. I fall into that camp. I know that the Bitcoiners have a totally different view here, right? They think that proof of work is the best thing ever, which is fine. There's arguments for and against. But for me, I'm really excited to see the experiments play out, because we're going to have 2 kind of grand experiments play out between a proof of stake network that, is actually securing billions of dollars or trillions of dollars in value on Ethereum, and then a proof of work network like Bitcoin, and we get to see what kind of works. So yeah, that's kind of another thing, and why people are really excited. And ETH2's been in the works since like the original concept of proof of stake and sharding were around since the Ethereum was born, basically, and we're now realizing that vision because the research had to be done, right? The research and development. Ethereum's proof of stake is actually unique, very, very different to other networks, because people might be asking, why can these other networks have proof of stake before Ethereum? Right. Well, they're actually using very different mechanisms to what Ethereum is using. And a lot of one of the mechanisms that's very popular is called delegated proof of stake, where you can basically delegate your stake to someone else or to a staking entity, and they'll stake for you. Whereas with Ethereum, everyone can stake on their own, right? You can do the delegation as well, or you can like use a centralized exchange or whatever, but you have the option of doing it on your own. Whereas these other networks, they don't give you that option unless you want to be a staking company, right? Because you have to have a lot of money. Whereas with Ethereum, like to become your own staker, it's 32 ETH, which is a lot of money right now, right? It's $32,000, but you can still, there's going to be decentralized staking pools as well, where you can like buy a little bit of Ether and stake. So that's another core value, is that they wanted everyone to be able to stake, and it wasn't blocked off, and it wasn't centralizing as well. So yeah, I mean, that's kind of like the gist on ETH2. It's coming, but I think maybe some people think, ETH2 is live already. It is in the first phase form, but the full suite is probably going to take us, I'd probably say about 2 years from now to realize the full vision. But while that's happening, we have ETH1 and layer 2 scalability happening as well. So you'll be able to benefit from that too.
Anthony, this has been awesome. I've been learning a ton on this episode, so I appreciate everything so far. But as I mentioned, we have a segment that we call You Had Me at Crypto. It's 3 questions that we ask every single guest. So over to you, Alf.
Anthony, who's your favorite person to follow in the crypto space?
Oh, that's a hard one. There are so many characters in the crypto space. I think, in terms of like who provides me like educational content and like very kind of like always puts out like great tweet threads and blog posts and all that sort of stuff. There's too many people to name. I can't actually name one there. But if I'm sitting on crypto Twitter and I'm just scrolling through, I always get a laugh following the Gen Spartan. So he is an anonymous crypto figure who just posts a lot of crypto memes, right? He's not actually like dumb. He understands how everything works, but he is always a laugh whenever I scroll past one of his tweets. So he's one of my favorite kind of meme follows, so to speak. But in terms of like, following people for fundamental analysis and really enjoying the content that they put out, there's just too many to name at this stage. I would be doing a disservice just naming one person. So I follow like a ton of people because there's so much content being produced, so many tweets being put out. But yeah, I mean, if I had to pick one in terms of like the meme side of things, it would be, the Gen Spartan. He's pretty funny as a character.
When in doubt, fall back on memes.
Yeah, exactly.
Question 2. What will the price of Bitcoin be 10 years from now?
Oh, that's hard. That's definitely hard and near impossible to say. I guess, I couldn't even say this for Ether as well, like what the price of anything could be. But I mean, if, I think Bitcoin is on its way to becoming like a mainstay within traditional finance now as well, where a lot of people are buying in, a lot of big money's buying in. So 10 years from now, if you subscribe to the 4-year market cycle of crypto, that every 4 years we get like a new bubble cycle playing out, then, if we extrapolate that and take into account diminishing returns, you could say that one Bitcoin could be worth $1 million in 10 years.
All right. And since you're maybe not an ETH maximalist, but true believer in Ethereum as basically the number one project, then what price would you put at ETH in 10 years from now?
10 years from now, I would say, if Ethereum succeeds at everything that it wants to do, and taking into account the same, I guess, kind of logic I'm using for Bitcoin in terms of the 4-year cycle, and if Ethereum and ETH gets the adoption, I guess, from the traditional finance side, which I think it will, and from big money, in 10 years, I think you could see a $100,000 ETH.
Nice. All right. What is the most underrated coin or project in crypto?
Oof, that's hard. I actually think that the index co-op, the one that I'm working on, is very underrated right now because, we focused a lot on not causing speculation on the token, right? We played it very safe there. We wanted to create a community that wasn't very speculative. And because of that, you don't hear about it very much because, no one's kind of shilling their bags, so to speak. But I actually think if you join the Discord channel and you go in there and see the community and all the work that they're doing, you'll be blown away by it because you don't really hear too much about the project just yet. But I think that that's one that's definitely flying under the radar at this point, for better or worse.
Cool. I'm really looking forward to some more indexes coming forth. I'd love to jump into an NFT one myself.
Yeah. Hopefully we'll have those kind of things live in the next kind of like couple months. There are more coming. NFT indexes. I mean, there's been so many that's been proposed. You might see one sooner rather than later.
Cool.
Awesome. Well, thanks so much, Anthony. We really appreciate you taking the time and appearing on this episode of Show Me the Crypto.
Yeah, thanks for having me, guys. It's been a really great discussion. I try not to get too in the weeds with things if depending on the viewer, right, on these sorts of things. But unfortunately, these things can be complicated. So for anyone watching or listening, don't be disheartened if you didn't understand anything. I always like to say that. Just learn, right? Always learn. There's plenty of resources out there that you can go and learn, and you'll learn in time. I mean, I was the same. I started from zero. We all start from zero. Just make the most of the content available to you.
Thank you for listening to Show Me the Crypto. Please make sure to subscribe as well as rate and review this podcast.